Thanks very much, Eric, and welcome to the Zzeem webinar studio. Today, we're going to look at one of the essential risk management tools for your association, specifically insurance. This is an evolving field, and there are a lot of myths out there about association insurance. We've recently done a full insurance review for all of our clients, and we learned a lot. And there were some surprises, too. So today, we have Jodi Nobel in the studio, who's an expert in this area. Jodi is a registered insurance broker for insurance program managers, groups, and associations. She works exclusively with the insurance program offered by the CSAE. For those of you who don't know, that's the Canadian Society of Association Executives. She specializes in the nonprofit sector with a passion for helping individuals and organizations navigate the complexities of insurance coverage. Jodi has established herself as a trusted advisor in the field, and I can vouch for that, and she holds her Chartered Insurance Professional designation. Her ability to communicate complex insurance concepts in a clear and relatable manner has made her a sought-after educator within the industry. Welcome, Jodi.
Thanks, Erin. I'm excited to be here.
Me too. For those of you who are regular attendees at our webinars, you know we host these events to give you timely, valuable information that you can take back to your association and use immediately. These webinars also give us an opportunity to help you see some of the work that we do. So when you're looking for help, you'll think of us. So let's get started talking about insurance. Why does it matter? Well, most of us have insurance because we feel we need it and we're right. But really, do we know whether we have the right protection? Do we have the right kind of insurance? Do we have the right amount? So this is why this conversation really matters. What we're going to focus on today is we're going to talk about what's changed over the last few years and what do we need to be aware of. What kind of coverage should associations have? And before we even get started on that, or what are the risks that we should be assessing now? What happens if we've got insurance, but we happen to be sued or charged with something? How is insurance going to help us? What will it do? What won't it do? We'll talk about next steps, and then as always, we'll have live Q&A at the end. So in terms of what you and your directors need to know, the first thing is, what risks do we face? Because the risks that can be mitigated by insurance are the ones that we should be focusing on when we're talking to our broker. What's the best kind of insurance for us as an association? That's going to vary depending on what we do. And then even equally importantly is, what does our insurance not cover? So Jodi, let's start with the first question. In terms of what's changed, let's talk pre-COVID, since that seems to be the benchmark that we all look back on. What's
Yeah.
changed? And if we're looking for an insurance review, what are the things that we should be thinking about and paying attention to?
What hasn't changed since 2019, really? I think, our world has changed so much since the pandemic. And, there are things that affect the insurance industry, kind of directly related to that. There's a lot of outside factors that we've seen kind of within Canada that are really impacting this industry. So the economy is one, labor shortages is another, and then inflationary challenges also play into the insurance industry. And so insurance is a pool, right? Everybody's paying in. And then when claims happen, the insurance companies pay that out. And so when we're talking about what you need to consider from an insurance review perspective, I would definitely recommend, if you have not reviewed your insurance in the last few years, this is a good time to do it. Make it a priority to do it in 2024. We had really been experiencing a hard market in commercial lines since the end of 2019, beginning of 2020, and that market cycle is currently starting to soften. So what that means is we're starting to see insurance companies kind of reopen their doors where they're, entertaining risks that they weren't for a period of time, where kind of things were closed off, and we're starting to see rates soften as well. Um, where insurance products are starting to see decreases. And so it's a good time to have a conversation with your insurance intermediary if you haven't, and just kind of review everything that you have from an insurance perspective.
That's a great idea. And I know that we certainly learned a lot when we went through with that. One of the things that we discussed, and I'm seeing a lot of associations thinking about, is what kind of coverage do we need? I mean, I think most of us
Right.
realize that we need, general liability and directors and officers insurance, but what kind of coverage should we really have? Do we need the other ones?
Yeah, and I think that, is a much larger conversation and it plays into, I think, some generalities and I think some assumptions that the nonprofit industry has made with respect to insurance coverage. I'm quite often dealing with association clients who have only ever carried commercial general liability insurance and directors and officers liability, but without ever having that more in-depth conversation with their, trusted insurance advisor to say, these are what we're doing from an exposure perspective. These are our operations as an association. How does that translate into insurance exposure? And so I think, personally, I'm a big advocate for utilizing insurance coverage as a means to transfer risk, especially for smaller associations who don't always have the same level of financial reserves that large organizations do, as a means of protecting your overall association mandates. And most association clients that I work with, they do have a need for not just commercial general liability insurance and directors and officers liability, but also typically errors and omissions liability and cyber liability. And in 2024, those two insurance product types that I'm most often seeing associations not carrying are actually the two largest exposures when it comes to potential claims and what we're seeing from a claims trend perspective against nonprofits.
Jodi, could you just give us maybe a couple of examples of what kind of circumstances under which an association might want errors and omissions or cyber liability?
Yeah, for sure. So errors and omissions liability insurance, just to kind of give a high level definition of what that insurance product is actually extending to cover. It's the type of insurance that your organization needs to protect it against an allegation of professional mistake. And that professional mistake is anything that you're doing from an operations perspective or anything that you're delivering to your members from a service perspective. So it can be things like, continuing education, member guidelines, best practice directive, if you issue a code of conduct for your members to follow, all the way down to things like programming, um, advocacy and lobbying work. So really anything that you're doing from an operations perspective is your errors and omissions liability exposure. And I think quite often associations think that directors and officers liability is extending to cover that exposure, but it's not, and it never has. And I think many organizations within this industry have a misunderstanding of what directors and officers liability is, that sometimes leaves them underinsured. And I think that, you know, the association in the nonprofit industry, I don't know why, but so many organizations seem to kind of paint directors and officers liability insurance with this very wide sweeping broad brush as, kind of the only type of insurance that their association needs. But that insurance is extending to cover the individual decision makers if they're named personally in an allegation of not acting in good faith, but it's not protecting the organization as a whole. And we are starting to see for the first time on the E&O side, from a claims perspective, where allegations are being brought forward against nonprofit member bodies for something that a member has done that the organization isn't aware of, but that may be in breach of that organization's code of conduct. And the organization is having to respond to and, pay for that legal allegation or that cost to get them out of it. And so you want to have this type of insurance in place because for the first time, we're really starting to see where things that historically I think have not been challenged for nonprofits are now kind of being brought to the forefront from a claims perspective.
Jodi,
Um,
I just want to explore that just a bit before we get to
yeah,
cyber.
absolutely.
Code of conduct. I mean, that
Yes.
almost makes me think that we should not have code of conduct because it's too risky.
Well, it's a larger conversation, but I think, it's more the fact that as a society, we're changing. Canada is becoming much more litigious, and we're becoming much more like our US, partners, right, across the border, where when something happens or if something is perceived to have happened, whether that is a, valid allegation or not, there's almost this attitude of entitlement where, whether it's another entity or an individual where they feel like they're, entitled to compensation for something that's occurred. And what we're seeing is, once that phone call is made to a legal professional, they're going to pick up that situation, whatever the situation may be, and everybody is being named in that allegation. So it's no longer a situation where just the individual is named. No, it's the regulator, it's the nonprofit member body, it's the individual. It's, as wide sweeping as possible in an effort to get some type of payout on behalf of that lawyer for the client in which they've picked up a case, right? Which is something that, even 5 years ago, we really weren't seeing, these types of allegations being brought against nonprofit associations.
Okay, so E&O is for the organization and any gaps that might be there in terms of what they've done or what they're alleged to have not done. And
Yes.
cyber insurance, it's not new, but it's not been a very popular option because it's been so expensive.
Yeah, and that's totally a fair takeaway within, the world of cyber liability. So, cyber liability insurance really is the new insurance product in town when it comes to types of insurance coverage. So, it's been, available for probably the last 10 years, but over the last 3 years is really when we've started to see some positive change where cyber liability insurance companies are now taking the same technology that they've been utilizing on the back end, with respect to forensics and helping you to investigate and manage a cyber claim. And they're now applying that to all policyholders on the front end using active monitoring components. And so, what that's done is it's really helped to take, an insurance product that was very volatile from a pricing perspective. So we were seeing, very high quotes for premiums with respect to coverage. We were seeing year over year where premiums were, doubling, sometimes tripling, where organizations hadn't even had a claim, right? But with the implementation of this technology, it's allowed the premiums on an annual basis to stabilize and they've come down a lot. So where this insurance coverage in the past, even if you explored it as recently as 2 years ago, it was a lot more cost prohibitive, where now, this technology implementation has both reduced the claims frequency as well as the severity. So now cyber insurers are almost stopping cyber incidents before they happen. And when they do happen, you are getting that full coverage. Because what we've also seen with the implementation of this technology is a change in the policy wording that is much better with respect to what the policyholder's obligations are on a policy. So historically, we were seeing a lot of responsibility put back on the policyholder with respect to making sure you're updating everything, making sure that you're following, certain checks and balances with respect to coverage in order for that to trigger in a claim scenario. But with the implementation of this technology into the policies, insurance companies who offer a comprehensive cyber product are really so confident now in what they're offering that those exclusions have been removed. And so the onus that was historically put on the policyholder really isn't there anymore. And what we're left with is a really comprehensive product that not only is going to try to prevent a cyber incident from happening in the first place, but when and if you do have one, because really it's when you will see something at some point, the response that you receive and the coverage that triggers is so well worth it that I would never advise any of my clients not to carry it anymore.
So give me an example, Jody. I mean, we all know about losing our data. And for some of us, if the data isn't particularly sensitive and it's not thousands and thousands of records, recreating that is not a major undertaking. It's just a bit of a pain in the butt. What else is it going to cover us for?
Yeah, and I think it's kind of changing how you approach how you're thinking about cyber liability insurance as well. So cyber insurance is really the type of insurance that you're purchasing to protect your intangible assets, right? So as an organization, you have all this insurance in place to protect your tangible assets, the things that you physically own. But in 2024, your intangible assets, your data, your member lists, your clients, those to many nonprofit organizations are more valuable, those intangible assets, than actually your tangible ones are. So it's important to protect it. And I think, cyber liability policies, it's not just one type of coverage. So when we talk about a comprehensive policy, you're not just getting your first party incident response costs. So that's what's going to pay, all of your out of pocket expenses as an organization, but you're also getting things like third party liability if you're sued. You're getting privacy and network breach liability, which is the type of coverage that you need, if somebody else has a cyber incident and when the forensics have been completed on that incident, it's determined that it was caused by your organization, but you may not have had knowledge of it. That organization is going to come back after you to say, hey, you're liable for this. You caused a cyber incident for us, even though you didn't know. And so, we're looking to get these costs recovered from you because it was determined that, you're patient zero, right, for whatever happened. And so that's an important one that I think a lot of people assume is not an exposure. And the other is business interruption coverage. So, we're seeing cyber incidents in the news, every day, multiple times per day, right? And you can be down and unable to operate as an organization for weeks, sometimes months before things can get back up and running. And so, by having the business interruption coverage in place, that's also going to pay for your lost operating costs, including payroll, if you can't operate the way that you were able to because you've experienced a cyber incident. But not only that, it's also the public relations coverage that you get, the PR reputational damage coverage to make sure that your reputation as an organization is upheld through a cyber incident. So it's not just one coverage. You really are, when you have a comprehensive cyber liability policy in place, you're gaining a lot of coverages. And I can't tell you, I've seen what claims look like when you have this coverage versus when you don't, right? Because I'm a big advocate for this and I'll have the conversation and I'll explain and give you the why. But if you don't see value in it and you turn it down, I'm still typically going to be the first person you call or high up on the list when something happens, right? So, I've seen what things look like and I've had the recap calls both, you know, when you have insurance in place and experience a cyber incident and when you don't. And from a peace of mind perspective, um, the experience of navigating a claim when you have insurance coverage and you have cybersecurity experts to handle this for you from start to finish within 5 minutes of you notifying them that something's gone wrong, versus when you have nothing and you have to source all of those experts yourself. I mean, I don't know about you, Erin, but I don't know who to call if I need a
Yeah.
forensic cybersecurity expert, right? Like, those aren't easy things. And so, it really is a whole bunch of things that you're gaining with this type of insurance coverage. It's not just one thing. And for the annual cost of a policy, because really we've seen coverage come down, right? It's not tens of thousands of dollars anymore for this type of insurance. Typically, we're able to put something very comprehensive in place for less than 3,000 a year. And even if you're going with a lower liability limit, you're still getting the full claims response. And so I really feel like, some coverage here for cyber is much, much better than running with nothing at all.
Okay, well, I mean, that's a really, really useful piece of information because that's definitely evolved.
Yeah, absolutely. So much so. And I think, more than any other product, the cyber has changed quite a lot.
Well, let's talk about D&O protection. I think I certainly didn't know everything that I know now about D&O after talking to you. So let's
Yeah.
talk about that. And these are kind of typical questions that come up in conversations.
Yes.
What is it there for? What does it actually cover? What happens if we get charged and we lose? Can you walk us through that and give us some kind of the danger points that we need to be aware of?
Yeah, absolutely. So just I'll go in and explain kind of what directors and officers liability insurance coverage is just on a high level quickly. So when we talk about that type of liability insurance, it is there to protect the senior level individuals as well as your boards and in some policy cases your subcommittees as well. And so it's there to protect the decision makers, but it's there to protect those people individually. So if an individual is named in an allegation, um, it's going to respond to protect your personal assets, whether that be, homes, cottages, potentially other businesses, if you're a sole proprietor, from being drawn into an allegation for anything that you may be accused of as part of your role within an organization. So whether that's being, the president of a board sitting on a nonprofit somewhere, or if you're an executive director, it's protecting you if an allegation of not acting in good faith is something that is ever brought forward against you. And so the coverage under directors and officers liability, it will extend to cover legal defense costs if something comes forward against the individual. And so depending on the policy, sometimes those legal defense costs are included as part of the liability limit, but sometimes they're paid outside of the liability limit. So it's always important to kind of
Oh,
look at your coverage as well, because not all policies are created equal. And if you have a policy where defense costs pay outside of the limit, you can imagine that that's quite a legal defense costs in
Huge, yeah.
2024 can add up very quickly. Yeah. So it's a huge advantage to have that, covered outside of the limit. And so the limits that you have are reserved for actual judgments, whether against the organization or against the individual. And so under directors and officers liability, where we see allegations against the organization would be relating to employment practices liability or potentially in a fiduciary liability situation. So those are two areas of directors and officers liability where it does extend to the organization. So if something happens relating to a hiring or firing decision, an allegation of harassment against either an individual, or again, if the organization is named, because usually we see both, right? An individual who may be perpetrating the issue and the organization because the organization allowed it to go on. That's when you're going to see the coverage trigger under directors and officers liability, if that makes sense.
So I'm just to get from the legal part to the judgment
Yes.
part. So let's
Yes.
say that what I think I hear you saying is whether it's inside or outside the limit, I'm going to get a legal defense. So someone charges us. Now, what happens if we lose? If we still have room left in our limit, does it cover any judgments against us?
Yeah, so you have a per claim limit and an aggregate limit. So the aggregate limit that you have on your policy documents is the most that the policy is going to pay out in a year, but the per claim limit is the most that the policy will pay per claim. So typically you have up to the limit of liability per claim. So whether that be 2 million, 5 million, and that will pay if your legal defense costs are included inside the limit, that's going to pay a combination of judgments as well as legal defense. Or if your costs are outside the limit, you're going to have your legal defense costs paid separately. And then that liability limit will be reserved for actual judgments, whether against the individual or against the organization. There are typical exclusions under directors and officers liability. So things where, typically if it's a criminal allegation, the policy is going to respond to cover legal defense costs. But if that allegation, whether it be an antitrust violation or potentially a criminal allegation against an individual, if that is determined to be valid, most policies do carry an exclusion relating to criminal activity, fraudulent activity, or an antitrust violation. And so in that situation, if it's determined that you did not act in good faith as an individual and you did do something that was fraudulent or that was malicious from an intent perspective, you can personally be liable for that because the insurance coverage is not going to respond.
Okay, so what I think I hear you saying is if the proverbial hits the fan here,
Yes.
legal is covered,
Yes.
probably.
Yes.
How much it will depend. If we lose and there's a judgment against us for a lot of money, then whether we're covered or not depends on whether it was criminal or not. And if it's not criminal, then we probably are covered.
Yes. And again, the concept of directors and officers liability, it is here to protect you because when you act in this type of role, you do always have that duty to act in good faith, right? And so this is the insurance coverage that's going to respond against an allegation that you didn't do that. You didn't take that step. Somebody is saying you were not acting in good faith as part of your role. This is why, this is the allegation. And so this is the type of liability insurance that's going to protect you from that allegation. So again, just making sure that you're always acting in good faith as part of your role. And as long as that's being followed, if an allegation were to come forward, this is the insurance that's going to respond and it will be there to protect you to the fullest extent of the coverage.
Okay, thank you. Well, let's talk about another question. This
Yeah,
came
for
up,
sure.
I heard this from a director a while back, and it wasn't something that I'd ever considered before, but they said, look, if we get judged against and, an award is that we can't possibly pay, why can't we just go bankrupt and that solves the problem? So the question for you then is bankruptcy an option? Is that does that stop us from any further difficulties?
So loaded question. So really typically not. If you just want to kind of shut the doors and throw your hands up and say, yeah, we're going to be done with this and walk away, like if this is the allegation, you still have an obligation to respond, whether it's the individual who's been named or the organization. From that perspective, in an insolvency situation, there typically is insurance coverage that will trigger. specifically to protect the directors and officers. Because in a situation where an organization becomes insolvent, if an allegation has come forward against the organization, typically one will follow against the directors or the senior level individuals. And so, even in that case where an organization may have shut down completely or is not able to continue because of a financial mismanagement issue, there would still be coverage under the directors and officers liability to extend to protect the individuals.
Okay, so then as long as there's D&O, regardless of whether the association files for bankruptcy, it should cover the directors in the
Yes.
same way we talked about before.
Yes. And I think it's important when you're talking about directors and officers liability limits, this is the limit of insurance that's protecting personal assets of the individuals who sit on your board. So you always want to consider, kind of the highest caliber individual or what their potential net worth or personal assets may be when you're trying to determine your limit for directors and officers liability insurance. When I see a $1 million liability limit in 2024, I mean, the average home in the GTA, it costs more than that, right? And so
Yeah.
you're not appropriately covering the personal assets of those individuals who are, sitting in the seats that you need them to with positions in your organization. If you're running with a million, you need to be running with limits that are higher than that in 2024.
Okay. So what I hear you saying is bankruptcy may be an option for the organization, but then it's really up to the individuals to make sure that their insurance is covering them under D&O.
Yeah, and I don't think a bankruptcy situation, like obviously, I'm not a legal professional, I'm an insurance broker, but I don't think you can just avoid a legal allegation by closing the doors.
Okay, well, here's another question that came up. Again,
Yeah.
an unusual question that I hadn't thought of. They said, well, we work with an association management company. So that means we've got no bricks and mortar, we've got no software, we've got no employees. And I know our association management company has insurance. Why do we need any at all? I mean, why can't we just rely on theirs?
Yeah, and that's totally fair. And when you're utilizing an association management company, the association management company has insurance for their operations, but what they don't have is an insurance policy in your association's name. And so if an allegation against any type of liability, right, or any claim were to come forward where the association was named, there's no insurance to respond. Right? So if you have a client, if client A is named in an allegation, but Zzeem was representing them, well, Zzeem's insurance is not extending to cover Association A, right? Because Association A is not a named insured on Zzeem's policy. So no, the association management company's insurance is not going to respond. In a situation where an association has, hired an association management professional and they have not acted in the proper capacity for their role as the association manager, then Association A could potentially, look to bring an allegation forward against the association manager. But no, the insurance coverage for that association manager is not going to respond for the association's individual exposures.
Yeah, thank you. And on that, I would just encourage everyone who is working with an association management company to make sure that you know what kind of coverage that they've got so that you know
Yes.
how protected you are in that event. I'm just seeing we've got a question here that is relevant to D&O, Jodi.
Yeah, for
And
sure.
I think they're really talking about the officers part of D&O and want to know whether D&O covers the executive directors as well as the board, the executive director as well as the board.
Yes, so it does extend to cover the executive director as well as the board. So any senior level executive working within an organization is covered under directors and officers liability. And actually, I should mention as well that there is a spousal co-defendant clause there too. So if the spouse of an individual, whether that be an executive within an organization or a board member, is named in an allegation solely for being the spouse of the individual who is not acting in good faith or alleged to have not acted in good faith, then the D&O coverage will respond to cover the legal defense costs for both of those individuals.
Okay, so basically anybody within the organization that might potentially be sued or charged at a senior level, which I guess would be the executive director or CEO and probably the CFO or COO as well too.
Yeah, so there's really so directors and officers liability policies, they used to have like a specific list, right, of directors, but that's changed. So really we don't have that anymore. There are no lists on file. The coverage is provided on a blanket basis, and so it will extend to protect anybody who's acting in an employee capacity who is making decisions. So if it can be proven that there were decisions made on behalf of the organization by that individual and an allegation resulted because of it, then the directors and officers liability will extend to respond.
Okay, so it sounds pretty broad-based then.
Yes, very much so.
And we've also got a question about D&O covering criminal items. So basically, if we are somebody is judged to have committed a criminal offense,
Yes.
is errors and omissions going to cover us then?
No, typically not. So most insurance policies carry exclusions relating to criminal acts. So whether that be a fraudulent act or a criminal act, an allegation of that type, the policy may initially respond for legal defense costs, but if it is determined that the allegation brought forward that was criminal or fraudulent in nature was in fact a valid allegation, then the individual who committed that criminal or fraudulent act is going to be on the hook for the costs associated with that claim.
Okay, so criminal, fraudulent, you're out of luck.
Yes, yeah. Acts of war, acts of terrorism, all those things are excluded from your policy wording, and that's typical across the board for any insurance policy, whether that be the commercial general liability, the errors and omissions, the cyber, or the directors and officers liability. Those things are standard exclusions across policies.
Okay, let's talk about when we get sued for something that happened in the past.
Yeah.
So let's say that suddenly we find out today that we are being sued, or there's an alleged incident that happened 3 years ago, and we had insurance for it at that point in time, but we no longer carry the type of insurance that would have covered it. Can we still claim, or are we out of luck?
So this is a good question. I like this question, and I think it's an important one. So there are two types of insurance policies when we talk about um, the the type of policy and how it responds. So there's occurrence coverage and there's claims made coverage. And so occurrence coverage is typically only commercial general liability is the only type of commercial insurance that's going to respond on an occurrence basis. And so that means as long as the policy was in place and it was paid for at the time of an allegation or something occurred, even if that policy is canceled, it is going to respond to that claim. So as an example, if you were to run a large scale conference, you ran it in 2019, suddenly something comes forward, you receive a statement of claim stating that something happened, someone's property was damaged at this event, and they're now coming forward against your organization saying, hey, we want to be reimbursed for this cost, this expense that we were out of pocket for. You don't have the policy anymore because it's been canceled. You can still claim against that canceled policy, but only on a commercial general liability policy because it's on an occurrence basis. All of the specialty liability product types, so directors and officers liability, errors and omissions liability, cyber liability, any type of intellectual property coverage that you may have, crime insurance, those are all written on a claims made basis. And so what that means is that the policy has to be active at the time the claim is made in order for it to respond. And claims made policies always have a retroactive date of coverage. And so that retroactive date of coverage is very important to protect because if you have a gap in insurance, so if you accidentally lapse or cancel your coverage, you do not have the ability to go back against it for everything that you paid for that insurance for previously, it will be lost. So we always honor that retroactive date of coverage. So if you're changing to a new directors and officers liability insurance, or if you're changing to a new errors and omissions insurer, you always want to make sure and ask the question to make sure that your retroactive date, if you had that policy previously, is being honored so that you can go back against that policy. And so it will honor anything that happened in the past as long as on that claims made policy, the insurance coverage is kept active. So you have to pay for it year over year over year, and it will respond as far back to any allegation as you've always had that coverage. In a situation where you are no longer continuing as an organization, if you are winding down, say for an example, you carried insurance coverage that was project specific, you want to purchase what's called an extended reporting period on this type of insurance coverage. And that extended reporting period can be anywhere from, 2 years to I've seen it as far as 10 years, depending on contractual obligation. And what that does is it makes it so even though the claims made policy has been canceled, you do still have the ability to make a claim against that canceled policy because you've purchased the extended reporting period, which will allow you to do so. Typically, insurance companies do build in a small kind of stopgap or fail-safe into their policy wording. So you usually have a period of time after a policy has been canceled to bring forward an allegation if something's occurred that you weren't aware, that you've now been made aware of. But usually that period of time without the extended reporting period is 60 to 90 days, depending on the individual
Okay, so
insurance
not
company.
much then.
No, not very much at all.
So I think you raised a really good point. I mean, we don't have a lot of situations where organizations are just closing their doors and going out of business for one reason or another, but
Right.
certainly we have differences in how people are running their business. They might not
Yes.
have a conference anymore when they did have a conference, or they might
Yeah.
not be offering education when they were offering it before. And what I
Yes.
think I hear you saying is that there may be a time at which you don't feel that the insurance is no longer needed, but you do need to buy an extension. Is there any sense as to how long that extension needs to be?
Yeah, I mean, you always want to look at kind of statute of limitations as well, right? So commonly we see 2 to 3 years when it comes to errors and omissions insurance or
Okay.
directors and officers liability. And that usually does, kind of extend long enough that if, something were to come forward, you would still have the ability to respond. And you also want to make sure that if you are in a wind down situation, that you are keeping the insurance in place until all the financials have been finalized as well. Because typically, once that kind of finalization has gone through, if there's a financial related allegation, you would have seen it before that period of time.
Okay, thanks. That's really helpful, Jodi. Now let's talk about another common question that we get because we're all used to having, personal insurance. And when we're trying to decide what we want to spend on our car insurance, we're going to be looking at how high do I want that deductible to be vis-a-vis my
Fair.
premium. So is that a kind of a trade-off we can do here too?
Yes and no. I think it depends on the individual organization, and I think it depends on the exposure of the organization as well, right? I think, there are things when we talk about nonprofit member bodies or nonprofit organizations specifically, from organization or association to association, the things that we're doing are so different that, yeah, if you have some higher risk operations that you're doing, it may make sense to carry a higher deductible on something like errors and omissions or directors and officers liability. I don't typically recommend higher deductibles on property coverage because it doesn't usually make much of a difference in the premium. Um, but it really depends on the individual situation. Sometimes it can save you, kind of 5 to 10% annually on the insurance premium, but you always want to make sure that if you're offsetting the premium by increasing the deductible, that whatever you're setting that deductible at, you do have those funds relatively easily available. From a reserving perspective, if you do have a claim situation where you need to pay kind of that first portion out, right? So if you're debating increasing to, a 10,000 or 25,000 deductible on your errors and omissions insurance, you just want to make sure you have those funds kind of liquidity available if something ever comes forward. So I would never recommend putting the deductible up higher than where you would have those reserves always easily available.
I think that's a really good piece of advice. And basically, if you're going to increase the deductible, make sure you're self-insured for the deductible.
Well, and that's just it, right? Because the deductible is a self-insured retention. So, if you're not in a situation where, especially for smaller associations, if you're not in a situation where you have, that cash in the bank on a regular basis, then I would never recommend increasing the deductible. And I would recommend, running with a lower deductible in that case for that association. And I think, just generally when we're talking about insurance premiums for nonprofit associations from a budgetary perspective, I typically see associations that are budgeting 1 to 2% of their overall annual gross revenue towards total insurance spend for the year. But the reality is that number should actually be 3 to 5%. So if you're sitting within 3 to 5% of your annual gross revenue is what you're paying out from insurance on an annual basis, then you're within a good range of where you should be from a premium perspective.
Okay, so that's a good tip, 3 to 5%.
Yes. Yeah.
We've got another question here about the limit for D&O, and the question is, that you had mentioned that $1 million is probably not enough if people
Yes.
have greater wealth. But of
Yes.
course, the flip side of that is what is the risk exposure? Yes, greater wealth means that there's a deeper pockets to draw on, but does that have any impact on your risk exposure?
Well, I don't think it has any impact on your risk or your exposure overall, but I think, in a situation where you've had $1 million limit, if there is a large judgment against you for something, if the allegation for not acting in good faith does prove to be valid and that, allegation does come with a judgment payout, if a judgment is over 1 million, you're on the hook for that personally. And I would never want to be sitting as a board member on a board where something could potentially happen where my personal assets may be drawn in. And I think I actually had this conversation with another individual this week, and we were talking about how, personally, I would most likely not be comfortable sitting on a board with a nonprofit association where they weren't carrying at least 5 million in directors and officers liability, just from my own personal peace of mind and comfort perspective. Um, that would be something that I don't think would make sense because I would want to be confident going into any board member position or into any executive level position that if an allegation came forward, that I would be appropriately protected. And so you have to kind of change your thinking when you're thinking about limits for directors and officers liability that way. You're protecting the individuals that sit on your board and you're protecting the individuals that are your senior level executive. And a $1 million limit in 2024 is not going to get you very far. Think about that for your own auto insurance. We increased auto liability insurance limits from 1 to 2, 10 to 15 years ago. And, why in the directors and officers liability space are we still thinking as associations that 1 million is an appropriate limit of insurance to carry? It's not enough. It needs to be higher. And the reality is that even 2 million is something that is probably still okay, especially for the smaller associations. But again, you want to kind of change your thinking. This is the insurance coverage that's protecting the individuals that you so value and that you so need to protect your association's mandate. For the additional cost of kind of upping that limit, I think it doesn't make sense not to do it, right? You want to be thinking about risk in that way. And it's not always just a dollars and cents thing. Because you can also use the directors and officers liability limit as a recruitment tool for new board members, right? When you're talking about insurance, you can talk about your robust risk management. You can talk about how it's important to your association's mandate to make sure that you can, give anybody who's sitting on your board the peace of mind of knowing that they're protected and they don't need to worry about their personal assets. So, it's kind of just changing that narrative a little bit to making it less about dollars and cents and more about the individuals that you're protecting with this coverage.
That's a really good point. And in all the years that I've been doing this, I can think of maybe one, possibly two instances in decades where a director has actually asked that question before
Yeah.
they got on the board. It's amazing how infrequently people ask that. And anybody who is on the line right now and has been a director, is considering being one, please make sure that you protect yourself by asking those questions.
Yeah, it's an important ask. And I think, especially again, it speaks to all these things. Our world has changed. Canada has changed. We are so much more litigious. And I think, for anybody who is sitting in that seat from, an employment perspective or a volunteer capacity, I think it's an important question to ask. Because you don't want to find out, kind of down the line when you didn't ask that question that you weren't appropriately protected when the, unthinkable situation happens.
Exactly. Jodi, in terms of those that are on the call right now, arguably, insurance coverage is an operational thing, and that's something that should be able to be handled by the CEO, the CFO, and the staff. But clearly, there's personal matters involved for directors as well too. So, if you're the CEO, what kind of conversation is it appropriate to take back to the board about insurance coverage?
I think it's important to make sure that you're having regular conversation about risk management. And so, insurance coverage is a form of risk management for your association and it's protecting your mandate, right? So, you know, you want to just change the narrative. I think insurance can so easily become, this topic that is dull or that is dry or that is kind of, it gets pushed to the side a lot, right? Like it's that, it's that item on the agenda that so easily is like, oh, we ran out of time. We'll talk about insurance next time. And I think it's important to keep it top of mind. I think it's important to make sure that you're discussing the insurance coverage that you have. And I think it's important to have the right relationships in place as well. I think, if you have an insurance broker or agent that you're working with right now that you haven't had a conversation with in the last couple of years, I think you should be working to schedule one, because I think if you aren't being proactive in your role as an executive director or the president of the board, where you're educating yourself about this piece, about the risk management piece, I think you're doing the association a disservice. And I think that, this risk management conversation is one that really needs to be brought to the forefront for any board, as an active, ongoing conversation, because we are seeing our world change very, very quickly. And this is something that you can utilize to help make sure that your association is going to be able to sustain itself years down the line, even in the event that you've been faced, with the unthinkable. And there's things going on. I think you and I had a conversation about this a couple of weeks ago. There's things going on, within Canada right now where we're really seeing some very interesting claim situations and legal precedents being, brought forward. And by utilizing insurance and talking about risk management, you can really help to preserve the association's mandate for the long term.
That's a really good point. I mean, at the end of the day, it is serious risk management, and it really it is all about the sustainability of the organization.
Yes, yeah, it is.
Okay, in a minute, we're going to go to a live Q&A, and I know we've got some additional questions, and Eric's going to share those with you. Just to be clear, Zzeem does not sell insurance and has nothing to do with insurance whatsoever. But if you want some help taking your board forward in terms of governance or leadership, you know where to reach us. So, Eric, do we have some questions? I know we do.
Yes, thank you, Aaron. Just
And
to
they're
go
going to be
over,
all for you, Jodi.
Awesome. I'm excited.
to go over some we received beforehand before we get to the live Q&A here. One thing, cyber insurance was a big question point. As you mentioned, it's becoming more relevant. What are recommended things to check for cyber insurance, and just how necessary is it for associations? You went into that a little bit, but as this one of our attendees pointed out, they've heard that it can be very difficult to get a successful claim, and that rates, even though they have gone down, are still often not affordable for smaller associations. Could you touch on that a little bit?
Yeah, for sure. And I think, this is something, if you haven't revisited obtaining a quote for comprehensive cyber liability insurance or cyber coverage within the last 2 years, I would encourage you to do so again. Things have really changed so dramatically within the last 18 to 24 months that it really does make sense to revisit it. We're really seeing a very dramatic shift for the positive. And I think the other thing that's important is any insurance intermediary that you're working with, you want them to be confident with cyber liability coverage. If you're dealing with somebody who is not well versed in cyber insurance, you can end up with a product that is not what you need. Or what I also see is a lot of organizations that are relying on very small, very limited cyber extensions, and they think that it's comprehensive cyber liability insurance. So if you're not paying for a separate standalone policy and you're relying on something that's maybe costing you a couple $100s a year on an extension basis, that's very much not the same thing as that standalone policy where I'm mentioning coverages like your first party incident response costs, your third party liability, the business interruption, the network and privacy breach liability, and the PR management related costs. So usually if you have that type of extension, it's just very limited to reimbursement of what you may have paid out of pocket up to a certain limit for first party costs only. And so it's important to make sure that you're talking to somebody who really knows their stuff when it comes to cyber liability insurance, and to make sure that you're looking at the coverages that are there. If it's just telling you it's, first party or incident response costs, that's not going to be the same thing as having a more robust, more comprehensive cyber policy. And I think the other thing to mention too is that you really, when we're talking about managing cyber risk, you can't just do one thing in 2024. I hear so often, oh, we have a managed IT service provider. Okay, well, that's great. What do you do when your managed IT service provider is hacked, right? And it's important to note that, you need to do a whole bunch of different things when it comes to managing cyber risk that really all work together to end up creating better overall cyber readiness. And, we've seen some interesting incidents. I think there have been a lot of articles in the news in the last couple of weeks about what the city of Hamilton's experiencing with respect to their cyber incident. These things are not something that you want to be navigating on your own. You really would like to have cybersecurity experts. And even if you have a good managed IT service provider, they are not a cybersecurity expert, and they're not a forensic cyber individual. And so, it's the difference between that peace of mind and not having it. And really, I'm a huge advocate for this coverage. It's really that, and errors and omissions insurance are the two things that we see claims for nonprofit associations. We do see smaller claims relating to directors and officers liability, but usually from a claims frequency perspective, it's more on the employment practices liability side. But what we do see are errors and omissions claims and cyber liability claims.
Oh, you're seeing more of those claims than D&O.
Yes.
Interesting.
Okay, and that actually does tie into another question we had received,
Awesome.
which is specifically, how strongly do you recommend errors and omissions insurance for associations? Which, based on the fact that you're saying you're getting more than ever before, I suspect
Yes.
you recommend it quite strongly.
Yeah, and really that's just coming from the shift within Canada to being more litigious, and where we do have legal professionals where, it's not a situation where they're just naming the individual. They're naming the individual, and they're naming every associated entity that that individual may have had contact with professionally. And so it's important to make sure that as an association, you have an awareness of the fact that that's changing. And, even if you have, disclaimers, if you have waivers, if you have certain directives, it's still, whether that allegation is proven to be valid or not, it's the legal defense costs associated with getting you out of that allegation that does not make sense. Because I'll be clear when I say, a lot of the claims that I see are not situations that I think, are going to end up with judgments against the organization because something actually has been done wrong. It's the legal defense costs associated with getting you out of the allegation that maybe doesn't make sense, or that most often doesn't make sense. That's where we really are seeing the claim costs start to add up for nonprofit associations. And I think, then if you're not putting that errors and omissions liability insurance in place, you want to be confident that the reserves that you have as an association are going to be enough to kind of get you out of, or to pay for that type of legal cost, because you can access errors and omissions insurance for your organization at typically, less than the annual costs associated with getting one legal notice letter reviewed if it's received. And so, you kind of have to look at that from an expense perspective and say, okay, so we can have this insurance coverage that's going to pay out and cover all of these legal costs, or we can do it on our own. And so it's just, again, choosing, how you're going to manage that risk. But I think even for associations who think they have no E&O exposure, there typically is still an E&O exposure, even if it's small. And we are starting to see those challenges kind of across all kinds of different mandates where, really some of these statements of claim are quite interesting. So, yes.
Tangentially related to that, one of our live questions, off the top of your head, can you reference any public cases in Canada whereby associations had to pay out a lot of money in damages that would have otherwise been covered by insurance?
Yeah, that's hard to kind of name specifically.
Of course.
There are some industry issues going on right now in the real estate industry. If you feel like kind of Googling kind of real estate associations across Canada, there are a lot of public articles about what that industry is currently facing with respect to some interesting challenges. Um, that's probably the most recent one. But if you, it's hard to kind of give specifics, right? Just from a PEPITA perspective, we can't really disclose, specific names of associations. So unless it's being very, broadly publicized or widely spoken about, it's not really something that we can speak to specifically. But that one on the E&O side, there is quite a lot published publicly about what that industry is facing right now. And I think on the cyber side, there's quite a lot published publicly, really on the daily basis about what entities are facing when it comes to cyber risk. And I think especially if your association or your mandate as an association is healthcare focused or related or education focused in any way, both of those two industries are so highly and actively targeted from a hacking perspective that a lot of hackers will be viewing your association as kind of the gateway or the backdoor access to your members. And so just kind of, again, changing that thinking a little bit to when you're protecting your intangible assets, you also don't want to be the reason why your members have experienced a cyber incident because you left the front door open and someone was able to walk in and access somebody else.
I would also add to that, let's keep in mind that we have plenty of evidence that the CRA has become a lot more aggressive in going after not-for-profit organizations right now. And in some cases, I really believe it's targeted revenue enhancement. And in that case, if you get hit with the CRA, I've seen situations where the CRA has come back with a judgment of, a year's worth of revenue for an organization. And not many people have that kind of money in the bank. And the CRA has not actually been right. Ultimately, the organization has won, but where do you get the money and the time to do that in the meantime when you're faced off against the CRA?
And you know what, I think that's, another thing to note too is that, regulatory fines and non-compliance of that sort are something that you can have covered as part of your insurance coverage as well.
Thanks. Eric, I know we've got a bunch more questions, don't we?
We do. I've got quite a few here.
Awesome.
Now, obviously, this whole thing has been about the importance of having the right coverage for your organization. One thing that one of our attendees has asked is for specifically small chapters that may struggle to afford the general insurance packages, even up to general liability. What options are there for those smaller chapters?
And I'm just thinking, Eric, maybe we can combine this with one of the live questions as well,
Oh,
which
absolutely.
is similar, saying what coverage is essential for independently incorporated chapters of a national association. And for those of you that are familiar, if you're independently incorporated chapters, you're on your own. You can't rely on the HQ insurance. Would there be a similar answer for both, Jodi?
Yeah, it is a similar answer for both. And I think, I think especially for the smaller associations always have my heart. I'm very passionate about working with nonprofit organizations, and I think it's better to be creative with insurance limits and potentially run with a lower limit of insurance, but still have the insurance coverage in place than it is to run with no insurance at all. Because the reality is that it's those legal defense costs that can knock out an organization so quickly if you're not prepared for it. And, we have insurance policies through our office where you can, get E&O insurance for under $1,000 a year for a small association, right? Or, directors and officers liability is similar. Cyber liability is a little bit more, but it's because of the nature of how much coverage and that kind of active monitoring component that you're getting built into it. And so, if you're kind of looking to balance it out, if you can get yourself even to a position for an association whose revenue is under 250,000 a year, where you feel like you can afford, 4,000 in annual insurance cost, that will get you coverage for all of the products that we've discussed. So the commercial general liability, the D&O, the E&O, and the cyber. So just kind of changing that thought perspective a little bit. And even if it means that you are running with that $1 million limit, where I know I've said, $1 million is not enough insurance to carry, but if the alternative to that is that you're not carrying insurance at all, it's much better to have $1 million limit or even potentially a $500,000 limit than it is to have nothing, because you would still get that legal defense cost coverage. And I think that's such an important piece of the conversation in 2024. It's not that we think, associations are running around, not acting in good faith, doing all these crazy things, giving their members directives that don't make sense, that are constantly being challenged. No, that's not what we're seeing. But what we are seeing is where, our country has shifted to be so much more litigious, and you don't want to be caught having to pay for something out of pocket because, again, one small, employment practices liability or one small errors and omissions claim can very quickly be, 50, 60, 70, $100,000. And for a smaller association, you don't have those funds available. So alternatively, if you're able to put insurance coverage in place for that specific exposure, that's going to cost you, like I said, under 4,000 a year for everything. I think, from a budgetary line item perspective, better to kind of try to shift and get yourself something than it is to run with nothing.
Okay. No, that is fantastic. Thank you. And kind of to build upon that, if you are currently looking at renewing or getting insurance for the first time for your organization, what are the things you recommend most when speaking to your insurance provider and attempting to find the right package for your organization? What are the best questions to ask?
So I think it's important for anybody who is working with an insurance provider. You want to be confident when you've left that conversation with anybody that you're working with, that they have a clear understanding of what you do as an organization. If you've left that meeting or phone call or email conversation and you feel like, I'm not really sure they get what we do, then that's probably, that should be a light bulb for you that maybe you're not working with the right insurance intermediary. And not every insurance broker or insurance agent is going to be confident and is going to be knowledgeable when it comes to nonprofit risk. And you want to make sure that you're working with somebody who is, because I think that's going to get you a lot further than if you're working with somebody who, well, maybe they have two nonprofit associations, in their entire brokerage, right? And so they're not going to know as much about what nonprofits are facing or what type of exposures nonprofits have, where they even know what questions to ask you. And so you want to feel confident leaving any meeting that you've had with an insurance provider that there's understanding on the part of your insurance broker. And you want to feel confident in going away from it that the information that you've been given is correct. And so I will say, I dig very much into operations. I would rather have a conversation with you, and I think Aaron can speak to this, about what you're doing as an association from a mandate perspective, and then kind of work backwards from there. Because I think if I don't understand what you do, how am I going to be able to recommend appropriate insurance coverage for you, right? And I think that is a piece that kind of in the world of commercial insurance sometimes gets lost. And I think that's why it's important to make sure that you're working with the right individual.
Okay. No, thank you. Yeah, and to continue, in regards to specific policies and pricing, and how much that can need for on a case-to-case basis for associations. Our policies and pricing structured based on in-depth analysis of the association. As an example given by the person in the live chat, for cyber insurance, would there be an audit of current IT practice and infrastructure, staff training for clicking on bad links, etc.?
So I can speak to our program that we offer through CSA Insurance. So every cyber policy is a little bit different, and every cyber insurance company is a little bit different. The insurance program that we offer for cyber liability through CSAE is one where we developed it specifically for nonprofit associations. And so one of the things that we did when we went out and developed this program is that we removed all of the minimum technology requirements that you would typically have under cyber policies, or that traditionally have been included in cyber policies. And we instead opted for an automatic deductible buy down option at time of claim for every piece of technology that you have in place. And so there's things that the insurance company would like to see you do, but there's nothing that you have to do to trigger the full scope of coverage. And so the things that cyber insurance companies, or the ones that we work with on the program, would like to see you have in place are things like an endpoint detection system, having offline and segregated backups in place, using multi-factor authentication across platforms, and also having a documented policy and procedure in place for if somebody contacts you looking to change banking information, whether that be a supplier or an employee, that you are calling an outside verified phone number, so a phone number verified on Google, to contact that individual who's asking for the payment information to be changed. So those are the things that the insurance company would like to see, but none of those things are mandatory in order to have access to the full scope of coverage. It's just the difference between a $5,000 deductible at the time of claim or a $1,000 deductible at time of claim. And that's been done intentionally because we wanted this insurance coverage to be accessible to both the smaller association and the larger association. And so, whether you leave the doors wide open to a potential hack or not, you're still going to have the full scope of coverage that we offer on the CSAE program. And I think there are other insurance companies, even if you're accessing your insurance outside of this, where that is an option now as well, but it's just making sure that you're asking those questions of your insurance broker when you're having the conversation.
So just for clarity, Jodi, what I think I hear you saying is that my deductible depends on what I have in place at the time of a claim.
Yes, on the cyber side, on the CSAE cyber program specifically, yes. And that was done intentionally so that the coverage was accessible for everybody, but that we were still able to provide an incentive to the associations who were utilizing all of the important key technology pieces, but that you would still have access to the same coverage whether you had those pieces in place or not.
Okay, thanks. That's helpful.
Hey, I've got one more question for you here. And I want to save this for last because it's kind of a learn more option. Is there a specific place where someone can go if they would like to read more about the different types of insurance for associations?
That's a great question. I don't have a specific resource, although Erin is welcome to share my contact information, and I can pass along a copy of a webinar that we ran earlier this year, talking about understanding insurance exposures for nonprofit associations. If that's a helpful piece, I'd be happy to share it. And what it does is it provides kind of more expanded definitions of the insurance products that we've talked about today. And it also provides claims examples for each of those insurance products as to what you may potentially see from a claims perspective as a nonprofit. So definitely I can share that with anybody who's interested.
Yeah, so please, if you're interested in that, please just reach out to us. We'll connect you with Jodi and you can get that further information. Thank you very much, Jodi. This has been a most informative and very useful conversation. I learned things that I thought I already knew, and that's been very helpful as well too. So thank you so much. This is a really important topic for all of us.
Thank you very much. I very much enjoyed it.
So I just want to share with you our next live webinar. We're going to be talking about volunteer recruitment and engagement on July 18th. And we will also be reaching out to you, as we always do, for your feedback about our webinars. Any thoughts you have for future conversations, future interviewees, please let us know. We'd love to hear from you. Thank you so much.